Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
Our strategy, and in that fund, we invest up to 5 million in companies that are, as I said, developing technology related to oceans, but not necessarily only software, as in the other funds. So we can do hardware, we do aquaculture, innovative aquaculture, always sustainable. So there always needs to be a sustainability element related to the funds where we actually improve, the sustainability of the oceans directly or indirectly. But it's extremely difficult to resist the appeal of money when there's too much money. So I think that South Europe still has too little money. So we don't have the risk of bubbles.
Hey guys, welcome to the VNTR podcast. Today we're hosting Stephan Moraes from Indico Capital. Welcome, Stephan.
Thank you for having me, Yuri.
Could you please introduce yourself and share your kind of background?
Yes, so Stephan Moraes, I'm 50 years old. I'm the managing partner and founder of Indico Capital Partners, which is an early stage VC based out of Lisbon. I was originally, I graduated in engineering, then I did my MBA at Harvard Business School. That's where I discovered that one day I'd like to be a venture capitalist. But I did many things in the last 20-something years. So I was a consultant, a banker, a CEO, an entrepreneur, and I'm also an entrepreneur now, right? Because I founded my own firm. But I've been a professional investor for over 10 years. I came back to Portugal after many years abroad and living in probably 10 countries for a significant number of time. I came back, and 10 years ago, the Portuguese ecosystem was just kind of starting to show the first few success stories. And I first joined Caixa Capital within a bank and then led that for a few years. Things went well. We backed some of the best companies, of the last decade, and then decided to set up Indico Capital Partners, which was the first sort of early stage institutional VC, independent institutional VC out of Lisbon in 2017. And then we launched the first fund. We currently have almost 50 portfolio companies, about 200 million euros of assets under management, and the companies have raised just over 2 billion in the last 5 years. And so we've been involved, myself, Christina, Ricardo, each other founders, we've been involved with 6 unicorns in the last decade. So in a nutshell, that's what we do. We invest in B2B SaaS and marketplaces, primarily in Portugal, Spain, and Italy, and all the Portuguese, Spanish, and Italians all over the world, and all the foreigners that are here in these countries. So we are South Europe focused, but we have a lot of investments in the US, where the teams are spread between there and here in South Europe.
Yeah, thanks for the intro. I think Italy is new. I think last time we met, it was Portugal and Spain. Now
exactly. Now we're expanding to Italy also.
That's great. Yeah, there is not enough VC capital in Italy for sure, and there is good talent.
Good talent, increasingly more and more VCs. We know them well. They're good VCs and good partners. And so it was a natural extension. We've backed a lot of Italians actually from all over the world, but we haven't actually invested in an Italian company in Italy. But we've invested in Italian companies elsewhere.
And something else that stuck out about your background, your history, was your work with various government institutions such as the European Commission. So it was great to hear a little bit more about that and whether or not you think it kind of helped you in your venture career.
I was actually never an employee of any government, right? But I was an advisor to the European Commissioner, who is now the mayor of Lisbon, Carlos Moedas, and he was in charge of innovation and a few other things. And at the time, we helped come up with the idea of the EIC and help him push the agenda for more innovation in Europe and more access to venture capital. And so that was an interesting experience, being close to Brussels. And prior to that, in the past, particularly at the beginning of my career, I was an advisor as a consultant to several governments and privatizations that happened in the 90s and the noughts. And so that was my relationship to, let's say, the state, although I was actually never employed by the state, and I probably don't want to be.
So you mentioned that you were entrepreneur, kind of building your own startups. Can you talk a little bit about this experience?
Yeah, actually, the first time that I founded a company was when I was in London during the .com boom and subsequent bust. By the time there was a bust, I was already at Harvard doing my MBA. But we had the idea. I was working for a consulting firm at the time. There was, the market was super strong, end of the 90s, beginning of 2000. And we had this idea to create, a water exchange, because there were imbalances of water capacity between different points in the UK and even across the world. Water is obviously a huge, important topic for the future of the planet. And so we had that idea. We were backed by Arthur Andersen. We were two partners from Arthur Andersen and myself. And that was an interesting experience. It was the first time that I really started to understand the ecosystem. There were some huge gatherings of entrepreneurs and investors in London called First Tuesday. And that was my first experience. And then we quickly realized also that, the market had turned, the .com boom had turned into bust. And that was already when I was at HBS. And then subsequently, I had a few other companies with some friends. And then more recently, Indico. And Indico has been really an entrepreneurial experience to the fullest, because it took us a good 2 years at the beginning to raise the first fund, because despite the track record that we already had of successful, has investors and has entrepreneurs, particularly Christina, which had founded TalkDesk. It was still the first time that investors, particularly institutional investors like the EIF, were backing a pure VC fund in the country. And so it took some time first to get to the EIF and then to get the other investors on top of the EIF to reach a first closing of 40 million, and then to increase it to 50 something, and then to raise the subsequent fund. So we are, in a way, I still feel like we are a startup. We are 12 people. Processes are still internally in sort of like there's not a corporate as such inside Indico, although we have rules of how people should do things, of course, but we are a very collaborative company, very flat, non-hierarchical, and very close, just 12 people that are quite senior. The vast majority of people are very senior inside the firm. We're 5 partners. And it's great to have learned in other situations, both in corporates and banks and consulting firms that I worked for. And then in smaller companies, I also managed a factory at some stage and set up these smaller, entrepreneurial ventures. And it's good to now apply all that knowledge into my own company with my partners and try to have a good work environment to get things done, but not be too hung up on bureaucracy. And at the same time, we have a lot of bureaucracy because there's regulation and we are a regulated entity and funds. And so we have to take care of that as well. But it's fun to be an entrepreneur.
It is. But it's also very tough as well. And you said before that even though you're an investor, you're still an entrepreneur because you're buying and selling still, right? So I guess the question is...
Well, you're creating your own company, right? So when you're creating your own company, it doesn't matter if it's a fund or if it's a software company, you're an entrepreneur, right? And there's ups and downs, and you have to sort of make sure that you make ends meet and that your business is sustainable and that you get the loyalty of your customers. In this case, your stakeholders, which would be your investors and also your portfolio. And so you're there in the middle trying to make everything happen. And it's always a challenge to be an entrepreneur. That's why we are so grateful and appreciative of working with so many entrepreneurs throughout the world, because we know what they go through. We know it. We also have our own company.
Yeah, many entrepreneurs don't understand the struggle that VCs go through to raise funds and building their businesses. They think that you have the money, you invest. Exactly. They don't care where you got the money.
Yeah. That is very typical, Yuri. I mean, I think there's a total lack of understanding that number one, the majority of money is not our own money, although we also have to invest our own money. In fact, everything you have has to be put into the business. But then you're really representing other people's savings. And that is extremely, extremely serious. And it's a huge responsibility. But why would they invest in your fund, right? I mean, how can you pick really the best companies and show better returns than everybody else? Because it's a hugely competitive business. It is way, way harder to raise a fund than to raise capital for a company. Way harder. I mean, the success rate is much lower. There's less sources of capital, particularly in Europe and particularly in South of Europe. And so we're blessed to have investors from all over the world, but we're still at the beginning of that journey. It's only been 5 years, 6 years since we started with the first fund. And so we're still, striving for results of the first fund, although we had previous track record, of course. But in Indico, it's still early days, and the funds are 10-year-old entities, and we're still in just finished the first half of the first fund, although we now have 5 funds.
Would you recommend South Europe for entrepreneurs to move to start their business?
Look, I think that it has several advantages. Number one, there's the people in these countries and certainly in Portugal are extremely hardworking and flexible. So people dedicate themselves. They don't move jobs every 3 to 4 months. There's some stability in the workforce, which is important when you're building a company and hiring people. The universities are very good. So the level of technical talent is very high. You probably can't say the same thing about sales and marketing talent. But that has been complemented by essentially a lot of foreigners coming to Spain, Portugal, and Italy, and moving here. And Portugal in particular there's been an avalanche of foreign talent coming over for the last 5 years, which has been great for the country because it really adds to the mix and diversity and capacity. And so you can now mostly hire all the talent you need, or most of the talent you need, at least at an European level. You don't want to compare it maybe with Silicon Valley. And so I think it's a good place. It's easy to attract people to the south of Europe because people know that they're going to have a balanced lifestyle. It's a good environment to raise a family. It's safe. Infrastructure is excellent. And so, yes, I think it's a good place to start a business. And the proof is that many big corporates have recently, opened up offices here, and also that we have backed several foreign entrepreneurs that have moved here.
Right. You mentioned that you studied in Harvard, and I think that your program was focused on venture capital, right? And it was quite a long time ago. So how was the learning experience, and how much of that content you actually applied in reality? And
Right. Well, the MBA was, the Harvard MBA is a general MBA, so it doesn't focus specifically on one subject. But in the second year, you can pick up a number of subjects that are interesting for you and sort of complete your degree focusing on something. Although the MBA is a generalist master in business administration degree. But I picked, venture capital and private equity and fund management, a few other subjects in the second year, which gave me some background about the industry and how people think and how things work and how the US mindset and Silicon Valley worked, at least at the time, right? At least in the previous 20 years to the 2000s. And this was extremely useful because part of the work I did was I had an internship, kind of a program. A part of one of the subjects was a bit of an internship with a fund. So it gave me a taste of how it was to analyze investments and how to think as a VC. And then I also did some work on understanding the Portuguese private equity and VC landscape. So that allowed me to come here and meet all the players. And that led to opportunities in my career. So I think it was not only a question of learning the subjects and learning the technicalities, because of course those things evolve a little bit. But it was also a question of preparing me on how to talk to industry leaders, how to approach people, who's who, And ultimately, when I arrived back to Portugal a good 10 years later, I still used a lot of my knowledge from HBS to start investing in venture capital on a US style. And I think I was also lucky with the timing that, the ecosystem was growing and there weren't any competitors, or barely any competitors at the time. And so we were able to pick the best firms, establish a reputation. That's what led me to create Indico. So HBS and I think higher education is absolutely crucial in setting up your career. Way more than the knowledge itself. It's the way you conduct yourself, how to behave, how to have the right level of ambition and realism throughout your life. So I was extremely grateful, not only to my alma mater in Portugal, Técnico, which is an engineering school, but obviously to HBS that shaped my career.
HBS has a phenomenal network, right? It's kind of, I'm sure many of the grads became VCs, angel investors. So
yes, no, that's for sure. I think until a few years ago, the majority of VCs were either from HBS or from Stanford in the US, and that helps as well. It gives you some credibility when you come from the same spot. But I think it gives you more than that. It's kind of a common language, right? People understand each other because they've been through similar experiences, and so in diversity, there's also a common ground.
You spoke before about some of your successful investments in unicorns. It'd be great to hear a little bit more about them. But I think more interestingly would be understanding your reasons for investing in them, and if you're kind of still applying those processes today.
Yes, I think that ultimately, that has not changed over the last few decades. You're still looking for companies that are solving a problem in a way that is, multiple times better than everybody else out there in the world. That is a very tough question to ask because, or to solve from an entrepreneur point of view, because normally it's easy to come up with a solution to the problem. But the question is, there's many other people trying to solve the same problem. So how do you differentiate? And VCs tend to focus on those solutions to the problem that really can become global category leaders because they're just so much better. The second question we keep asking ourselves is, okay, so you're solving this problem, but is it a really big problem? Can you make a huge business out of it? And it's very closely tied to the first one because, again, when you're starting a company, the likelihood of failure is very high. And so when you're picking a portfolio as a portfolio manager, as an investment manager, a venture capitalist, you are trying to pick the best companies. In our case, in Indico, we pick about 1% of the companies that we see. So it's a very, very small amount compared to what we see. But we also know that a part of those companies, 20 to 50%, potentially more, will not work out just because, there's a big number of random facts that will make the companies fail at some stage, maybe in year 1, maybe in year 10, but it's extremely difficult to make them work. So you need to make sure that the ones that work out really, compensate for all the other companies that didn't go well, which means that you need to have global category winners, companies that will become hundreds of millions of dollars or billions of dollars worth in the exit, because also by the time you exit, by the time the company is sold, you're basically going to have a very small percentage of that company. So that small percentage needs to be of something very big, and that must be very meaningful to compensate for all the other ones that didn't go well. So those two first questions are very, very critical. And then you have to understand whether, these are the right people to make it happen. Do they have the level of ambition that actually can drive the companies to be global success cases? Do they have the right level of inspiration to be able to attract other people to join? Because they're going to need serious expertise in various domains and very senior people, potentially, way more senior than they are in multiple fields. Otherwise, they're never going to build a multi-billion-dollar company, right? You need very senior people, a lot of people. So you need to be someone that inspires others, that can lead through vision. And at the same time, you need to be, not only ethically correct, but also you need to be able to hear the other stakeholders. It could be not only the employees, but also your investors and shareholders. Particularly in our case, we are normally lead investors. So we work very closely with the companies, at least all the ones that we can work closely with and where there is an opening for that. And that's majority of them. And so we need to work with people that are nice, agreeable, and that can actually listen to you, debate, and then decide on their own, of course, at the board level, what they want to do because they're driving the company. But we need to have that sort of relationship. So when we see that, that relationship is not going to be there, it's harder for us to make that investment, because if we see that there's an adversarial relationship, we don't want to be partners or shareholders of a company where we don't have a good relationship with people. And so those three questions are absolutely fundamental. And when you look at the unicorns, from TalkDesk that Christina founded to Farfetch, which was a huge success case, and we did a great investment and divestment. That's another thing. You need to know when to get in and when to get out. And so the first success cases were obviously Christina founding TalkDesk, then us investing in Farfetch in Portugal and in Fever in Spain, two amazing unicorns. And then at Indico, we invested in Tier, a German company, which was a unicorn. And then we sold a part of it. 1 year into the investment, we already got all our money back. And then we ended up investing also in Anchorage and in Remote. Another two examples of Portuguese American companies, particularly Anchorage is Portuguese American. And Remote is a global company nowadays. And these are companies that grew very fast, where the founders had a huge ambition. They saw there was a problem to be solved or a market opportunity in a huge market, and they were able to attract enormous amounts of capital in addition to our own. And so the idea is to really try to find these companies as soon as possible, help them grow. We quite often help not only on the sort of strategy thinking about the company, but also on product roadmap, sales and marketing advice, and then almost always in terms of the financing, raising capital, be lead or lead negotiator in all the rounds, not only ours, but the subsequent rounds. And then at some stage, as I say, things go really, really well, we're kind of out of the picture. When the companies go really big and they've raised from the best funds in the world in Silicon Valley and sovereign wealth funds and so on, we're there just basically waiting for the exit to happen. So if things go well, at some stage, we're just waiting for the exit to happen. If things go mildly well, we will be more present until the end, which means, hopefully the end where we'll help the company to be sold or to be IPO'd. And we're there also when things don't go well. And, that happens now and again. And you have to help the company close down and do things properly and treat everybody respectfully as much as possible. That's what we try to do.
And in terms of the region, like if you meet founders that target the Portuguese, Spanish market or Italian, would you invest in these companies, or you're looking for global ambition and kind of global market as a target market?
It really has to be a global ambition. I mean, it is understandable that sometimes the companies start locally to test the products, and it's very important for entrepreneurs to test if the solution to the problem is, if there's anybody there that is willing to pay for that solution, the sooner the better. And sometimes it's normal that you do it locally or regionally at the beginning. But clearly, we really prefer the companies and the founders to sort of target, global markets from day one, particularly the US in terms of software, because ultimately it's the largest software market in the world. And it's a very, very competitive market. And if you solve the problem in the US, then you're on a path to global scaling. If you stick local to the local market for too long, you're going to lose momentum. It's there's less willingness to pay. There's less willingness quite often in Europe, and particularly in South Europe, to corporates to buy or to adopt new solutions. So you have to very quickly go to the global market, go to the US, and try to sell your solution to see if it works, and tweak it and go back and make it work while you have capital.
What about the companies that tend to expand to LATAM instead of US? Like, would you support these type of companies?
We have a few. We've done it in some cases, and in fact, mostly it has gone quite well, but it is not our preferred sort of target market. I think that, for example, in Spain, the Spanish companies tend to do that quite a lot for language reasons, and because these are apparently, markets where there might be more cultural affinity. But the truth is, it's harder to raise capital for those situations when compared to companies that go into larger markets and do well. The depth of capital for a US expansion or even a Northern European expansion is larger than what you would have if you want to expand into Peru or Mexico or other countries in South America. So it is not our preferred sort of geography of expansion, but of course, sometimes it makes sense. And one of the successful companies in our portfolio is called Zen Club, which was recently merged with Conexa. And so it's now called Conexa. And it was, a Portuguese company in sort of the mental wellness space that decided to go into Brazil, did extremely well, and, raised capital locally with us and with major local investors, and then ended up merging with another major health tech company in Brazil, backed by Goldman Sachs and so on. So things are going well. But indeed, the path to unicorn, the path to an exit is quite often easier, and it's always difficult, but it's a little bit less difficult if you do well in the US market or in a major Northern European market.
And you mentioned before the brief story about how you started Indico, but it'd be good to go into a bit more detail about that for any kind of aspiring fund managers or fund creators out there, just a bit of background about the inception of Indico.
Yeah, I think what you need to, at the beginning, if you are an aspiring fund manager, you need to have supposedly some track record. This is the chicken and the egg, right? Because if you've never done it, you don't have a track record, they don't let you do it. So you need to get some exposure to the asset class somehow, where you can claim to have some track record somewhere. And then clearly it's a little bit like the companies, right? For you to raise money into your company, you need to show that you're targeting a big market in a differentiated way. So why do you claim, or how can you claim that you actually have privileged access to deal flow? Why would entrepreneurs choose you instead of all the other funds in that market? What's your strategy? What kind of percentages and amounts of capital you want to deploy? So at which stage? So you're talking about putting together, a strategy for the fund, which entails the types of companies or industry that you're targeting, the type and sectors, the type of size of rounds. So is it early stage, pre-seed to seed, Series A or Series B or D and above, or what is it? And the type of geography. Is it pan-European? Is it your own country? Is it a region, as in our case, kind of South Europe, but with a twist? You have to have some sort of story to tell the investors. And then for sure you're going to get, 200 no's and maybe one yes out of 200 or 300 no's. So it's extremely, extremely difficult.
So regard to your track record, so you did build your track record with Caixa Bank, right, as a VC? It's kind of what was your experience there, what was your journey? Like you joined and spent multiple years. I think some of these unicorns you guys funded as Caixa Bank as well, right?
That's right. So basically what happened was that we, when I arrived in 2013 to Portugal, you were starting to see that there was a new generation of entrepreneurs, highly global, very ambitious, not the kind of people that you'd have in our generation where you just wanted, a nice job, work hard, have a job, build your life. And I think that with the advent of the internet and just communication, people understood that, everybody could try to be Mark Zuckerberg, right? And so I think that level of ambition was something new 10 years ago. And indeed, you were starting to see people like Christina become successful with her partner raising capital in the US. And essentially, those were the inspirational stories that allowed us to put together a strategy to invest in the best companies in the market, both at the pre-seed level and seed level, because that was essentially what was happening in the few Series A. And then some of those companies were able to raise a lot of capital from other players, particularly foreign funds. And that was what allowed, when the investors looked at us back in 2017, they could see that in this region, particularly in Portugal, we had access to all the deal flow. We were the first port of call at the time, Caixa Capital, for entrepreneurs that wanted to raise capital. And they knew that after our capital, we could introduce them to great investors abroad that could take them to the next level, into the next level before the exit. So that is the reputation that you need to sort of create as a hands-on investor, someone that they can trust. You don't have to agree all the time. There's always things that don't go well. It's normal. And there's people that you just, you regret that you've invested, or likewise, similarly the contrary, they might regret get your money because it doesn't go well all the time. But overall, you have to build a reputation and a track record with numbers that shows that you know what you're doing, that you do proper due diligence, you know what you're talking about in terms of investment memorandums and investment agreements, and all that and much more is seen by the LPs, by the potential investors.
You spoke about deal flow before, and I imagine as a VC, you must get loads and loads of people reaching out to you. Do you have any advice for founders reaching out to you about how to maybe, stick out and get your attention over the other thousands that you probably look at?
Yes, indeed. I think all VCs get bombarded with lots of emails. I think the first thing is for people to check, the website of the fund. I think we get a lot of emails from entrepreneurs that have nothing to do with our strategy. So if you're like a biotech entrepreneur, or if you're based in Denmark or in Chicago, there's no point on getting in touch with us. If you go to our website, it states very clearly what we do and the regions that we work with and the kind of deals. And so I understand that when you're an entrepreneur, because we are also entrepreneurs, you tend to, shoot lots of emails and try for someone to maybe reply and so on. But the reality is, when we glance through that initial email, if we don't see that there's a connection to what we do, we don't even have the capacity to say no, because it's just dozens per day, right? So you end up just deleting. If you don't see that there's some connection to our region or to the type of things that we do. One way to overcome that, of course, is to have an intro from someone that can say, look, I know such and such entrepreneur. This is someone to be trusted. You should speak to them. But even then, there is a process to be had. And so sometimes we get, WhatsApp saying, oh, can we talk tomorrow at 3 p.m.? It's like, it's impossible. Right? I mean, it's just by chance that we can do that. Otherwise, I'll have to sort of reschedule other meetings. So even if you are friendly in a way that someone knows you, you still have to go through the process. You still should do it by email. Send us the pitch deck so that it's not only me that is going to look at it, but it's probably my team at the beginning, because I get in at the later stage in the process. And it's actually at the beginning, there's other partners that look at it, because it's very important that partners look at all the deal flow from the beginning. But you still have to do things properly. So you cannot expect that, you drop every other meeting and all the investments that you're doing and the to-dos and so on, and you're like, meet tomorrow at 3. It's just not feasible, right? So, number one, make sure that the fund that you're getting in touch with makes those kind of investments that you're looking for. Send your pitch deck. There's many ways of getting in touch. It's very easy to send pitch decks to VCs. The emails are on the websites. And then if you come through a warm intro, that's better. But you still have to send the email, even if it's copying the friend that introduced us, and have realistic expectations, because there's a limited number of capacity, and we get indeed dozens per day. So it's a bit difficult to go through it all in such a hurry. And the other thing that doesn't work very well is saying, "Oh, I'm about to close the deal. You sign up here immediately, or you're going to lose it." That might work with some investors, but it doesn't really work with proper sort of deep dive investors that want to look at things. if we don't do this company, we'll do another one. It's fine. And we'll miss a few. It's okay, but we cannot just not do our work because there's some sort of urgency or some sort of pressure, real or artificial, that people are creating. And also the other thing that I think entrepreneurs sometimes forget is that VCs talk to each other, right? We all know each other, locally, regionally, globally. And so quite often people call me and say, oh, have you looked at this Spanish company that came here to talk to me in London? Why didn't you look at it? What's happening? Why don't the local investors, why didn't they pick it up? Why are they coming straight to London? We all know each other. We all talk to each other. And there's an element of competition. There's a big element of cooperation between VCs because there's a lot of risk involved and you need to do your work properly because you're a regulated entity. You're working on behalf of other people, other people's money. It's a very serious business and you want to do things properly. You don't want to sort of rush it or fall in some sort of trap in terms of rushing things.
So you mentioned as part of your thesis, you have the regional focus, but also, we met in the past and you shared that you have the blue tech fund and kind of few other theses for each fund. It's kind of what is your focus and how did you choose these focus areas?
Right. So our major focus is really tech startups. So B2B SaaS and marketplaces with a regional focus and the global diaspora that comes from it and up to Series B. That's mostly the majority of what we do. In fact, 150 out of the 200 million are dedicated to that. The other 50 million is a fund we launched 3 years ago, which is a fund focused on opportunities related to the oceans. We have a passion for the ocean for personal and professional reasons. We are called Indico, which means Indian Ocean. We're all surfers, swimmers, and sailors and divers in the team, so we all have that in common. We are in a country that has, vast coastlines of ocean and beautiful beaches. So there was an opportunity to raise a fund related to ocean-related tech because there were a number of LPs that told us about that, and this was something we wanted, that we thought fitted quite well our strategy. And in that fund, we invest up to 5 million in companies that are, as I said, developing technology related to oceans, but not necessarily only software, as in the other funds. So we can do hardware, we do aquaculture, innovative aquaculture, always sustainable. So there always needs to be a sustainability element related to the funds where we actually improve, the sustainability of the oceans directly or indirectly. And so that fund has a number of actually European companies that we invested in, even in the United States, although they all have or intend to have a connection to Portugal because that's where we are sitting. So that one is not so much a regional fund, is more of a pan-European fund, but there still needs to be something related to the country where we're at. We are big believers in being close. We like remote, we like the ability to have this talk here online, but we think that being close physically to people and understanding each other and having lunch and knowing each other builds trust. And so we don't favor strategies that are totally removed from physical contact. We prefer to be close to our entrepreneurs.
You also mentioned that the fund is only your company is 5 years old and already 5 funds. It's not a typical journey for a VC, right? It's kind of they structure the first fund. In 3-4 years they raise the second fund, right? So you already done 5. So what's going on?
Well, we're inspired by the other entrepreneurs that want hyper growth. The reality is that, when it's as we all know, it's super hard to raise a fund. And so when we raised the first fund, we launched it in early 2019 or late 2018. And subsequently, Google got in touch with us and they wanted to develop Google for Startups in Portugal. And they invited us to be their partners for that program here. And we thought there was an opportunity to invest also at pre-seed because the other fund is seed to Series A. And we thought we were missing the link with the pre-seed. And it is important to back these very early stage entrepreneurs. So we launched kind of a complementary fund, just a 12 million fund to do some pre-seed. And that was like the second fund. It's not VC2. It was the second fund. And then because the fund number one was doing very well, the EIF and a few other LPs proposed that we would have what is called an opportunity fund, which is a fund that can invest in the best companies of the main fund. So that was our third fund. It's another 25 million. And then the opportunity came about of this blue fund, which fitted our ethos and our intentions in terms of sustainability. So we ended up doing our fourth fund, which was the blue fund. And then more recently, we launched the subsequent fund to the three initial funds, which we call VC2, but it's actually our fifth fund. So it's complicated. But the truth is, when you have an opportunity and you think you can deploy capital in an efficient way, and you have an opportunity to you raise a fund, right? And you make sure, obviously, that there's no conflicts of interest. You make sure that there's no overlap. You make sure that you have enough team to actually do the work. Because if you don't have enough team, and if you do something wrong, you will not raise any other funds. So, you don't want to do things wrongly. So you want to grow fast, because at the same stage, I think it's extremely difficult to be in the market with assets under management certainly below 50. I think it's crazy. And even below 100 or 200 is extremely difficult, because you want to build expertise, you want to build regulatory capacity, you want to build legal capacity and M&A capacity within your fund. But if you don't have the assets under management, how can you do that, right? How can we in Europe compete with US funds when they are on average 10 times bigger? So I think the industry needs to grow. There's no shortcuts, but we need to be a little bit more ambitious. And so that's what we try to be in Indico, is to grow as fast as possible in a sustainable way, in a way that makes sense. And as long as there's investors that understand the strategy, understand what we're doing.
You must spend a lot of time analyzing both opportunities and threats, whether it's related to a particular deal that's come in or not. So just out of interest, like, where do you get data from? Like, what kind of data are you looking at when you're assessing kind of external opportunities and threats?
There's many sources of data, but I must say that, on an early stage level, of course, you do your due diligence. You ask the companies to give you a lot of information. You check out competitors and market sizes and so on. But early stage investing is not primarily a data-driven type of work, because quite often the entrepreneurs are coming up with a new idea, a new solution to a new problem. There's not a lot of track record in the market on solving a problem that didn't exist. The companies themselves have barely launched a product or launched it. And, we can speak to the customers, of course, but I think it's more of a conceptual thinking type of analysis. Of course, you have to go through the numbers, particularly, everything that has to do with the transaction. And you have to compare it with other transactions. So you have to go through databases and your own database about other transactions and multiples and so on. But quite often regarding the market, you have an intuition on whether this market is big or not big, because there's not properly reports on a market that just appeared. These are new things, right? So I think later in life of the startup, when you're reaching sort of pre-IPO levels, then you start having probably some data on that industry, because by the time the company got to that stage, it's probably been, 5 to 10 years, and the market has formed, and then you have data to compare. But when you're investing at pre-seed level or seed or even Series A, there's not a lot of data. This is why I am fairly skeptical about, investing based out of, an AI engine telling you which companies to invest, because, the AI engine is only as good as the data. And where is the data for all these new companies? When I see public databases, I'm not going to name names, but the most normal databases of startups, and I look at the markets I know, I can see that those databases are grown by a factor of 2 or 3. At least, sometimes 90% of the deals are not there. The companies that should be there are not there. Other companies that are there should not be there. And so I really don't trust the databases because it's a very incomplete set of numbers, companies, and private information. So I think that early stage VC is still very much a knowledge game. It's knowledge that you incorporate in your heads and that you have from experience, and that you can call other investors and compare notes, and obviously be on top of your game in terms of all the numbers that exist. But you're not going to base all your analysis on numbers because they're not right or they don't exist.
You mentioned that you invest in Portugal, Spain, and Italy. How these different markets compare? Like which one is more mature, and you still have some priority, or kind of you like one market than the other?
Well, I think it is more fair to say that we have more experience, obviously, in Portugal than Spain and Italy. But I can tell you what we've seen over the years. I'd say the more mature market is Spain, because they have been doing VC for longer, and there's been more exits, although on average smaller exits and unicorns. But it's a bigger market. There's more VCs. There's been more success cases over the years. Portugal has other advantages because it's a small market, so the companies tend to go global from day one. They're not going to stick around the Portuguese market because there's no market. So that's an advantage. No market is an advantage compared to Spain, where companies still rely on the Spanish market and occasionally the Latin American markets for expansion. So it gives them some comfort. But you're seeing that the next generation of successful Spanish companies are already targeting the US market and trying to become global category leaders and not only regional plays. The Italian market is a bit different. Italy has obviously huge industrial capacity, huge technological and science capacity, at least as good as Spain and Portugal, and probably even better, of course, in terms of industry. But the venture capital market took a little bit longer to develop. So until recently, there weren't that many very good VCs. And you cannot have only the entrepreneurs. You need to have the smart capital as well. And so I think the market has matured significantly. There's also a lot of support in these three countries from the state in terms of programs to help propel the ecosystem. Some things work better than others, but, there's a general feeling that, the Portuguese, Spanish, and Italian markets, governments have tried to help in the last decade, and particularly in Spain in the last 3 to 4 years. Italy, 3 to 4 years, Spain a little bit longer, and Portugal at least for a decade. And so I think that these are very different markets. They have huge potential. The challenge, I'd say even more in Italy than in other places, is that many of the great entrepreneurs have left the country. So we need to find them in other places. But there is a huge diaspora of Spanish entrepreneurs and the big diaspora also of Portuguese entrepreneurs. But certainly the biggest diaspora is in Italy. And these are markets where you have good opportunities, where you don't have an overflow of capital. There's not too much capital. When there's too much capital, that's not good either, because you see some of the bubbles that are created. It tends to misalign incentives. It tends for people to do the wrong choices in terms of investment targets, or for the entrepreneurs to take money that they shouldn't, either from funds that they shouldn't, or in the quantity that they shouldn't, or at the valuations that they shouldn't, because then it comes back to bite them. But it's extremely difficult to resist the appeal of money when there's too much money. So I think that South Europe still has too little money. So we don't have the risk of bubbles. So these are essentially.
Why did you skip France on the way?
So France is a very different market. France is an extremely developed market. There's a lot of funds. I'd say there's probably too many funds. The state has intervened massively in France. It's a big market, which means that the French entrepreneurs quite often tend to stick to the local market for way too long. But of course, with so much capital and so many entrepreneurs, France is a powerhouse. It has global companies. I think it's extremely well prepared in the new AI trend, as you see with Mistral and a few others. So it's a very different market from Portugal, Spain, and Italy, and it wouldn't make sense for us to sort of dive in into such a big market which is already very well covered.
And I guess the last question that we always ask our guests is, you've got so much to do, right? Work-life balance. Like, how do you balance that? Because it must be hard.
No, actually, it's not too hard. I mean, it depends how you structure your life. I think that there's two critical elements here. Number one, having by your side extremely, extremely good people, that they know what they're doing and that you trust them. So senior people, that you trust and that are your partners. I think that's critical number one. So if you divide the work with lots of other great people, it's not that hard. I think it's also a question of remembering yourself that, life is not all about work, although work is extremely important because it gives you a purpose and gives you the energy to do other things as well, at least in my case. So you have to do stuff that you like. So work doesn't become work. It's basically something you do that you like. But you need to understand that, there's family and you only live once probably. And your kids are only at a certain age for a little while. And you have a wife and you have family, you have extended family and so on. And it's important to balance. And while, doing well financially is important, that's probably not as important when you die, right? When you die, it doesn't really matter if you did well or not well. And so I think it's important to be able to resist a little bit sort of the financial pressure to the need to have things. I think you don't need to have a lot of things. You need to have experiences. You need to have good relationships. You need to have some sort of financial comfort, of course, and stability so that you can be in peace and have a nice family and so on. That doesn't mean that you don't have ambition, but I think ambition does not equate only to financial success. I think there's many other factors in life that need to be sort of taken care of in parallel with financial stability. So it's a question of having the right people around you and the last thing is to be very flexible. So I quite often work very late after the kids go to bed. I work after they go to school if I don't take them to school that day, but before I go to the gym. And then I go to the gym sometimes at 9 in the morning because that's the time that my personal trainer can, do the class with me. So, I'll work before 9 a.m. I'll work after 10 in the evening. It doesn't matter, right? I think now with the devices we have, we can work at any time. And so I encourage people at Indico to do the same. I also encourage people to be at the office. It doesn't have to be at the office all the time, but I also don't believe in purely remote work, particularly when you're building a team, particularly when you have young members of the team and the trust and the knowledge is still being created and transferred and so on. And so you want people to be in the office, you want people to be together, but it doesn't mean they have to be in the office from 9 to 5. It can be at the office at different hours. And as long as we are all in the office more or less at the same time and we have, conversations, that's how you distribute work in a balanced way and in a way that you actually, you have a family and you have sports that you do and you can have some time off. And you don't have to sort of die at work or sort of like kill yourself with work that has no purpose and nobody likes you and you have no family and so on. I mean, for me, that makes no sense.
Great, yeah, great advice. And what would be like a few pieces of advice to investors, like other investors, how to build their career as a professional VC investor?
Well, I think that, I think when you are a professional in any industry, it's all about your reputation, right? And so if people know that you are trustworthy, that you do your work properly, that you will go into things with a certain depth and that you are fair, when I mean fair is, you're not too greedy, you're not over negotiating, and you can put yourself on the shoes of the other side. I think that's when you build a reputation for being someone trustworthy, dependable, and professional. And so I think this is for VCs or for any other profession. Your reputation, people need to see you as someone that they can trust personally and professionally for your ethics and for all you do. There will always be people that don't agree with you. There will always be people which are have envy or have doubts or have heard or said things will be said about you that you don't like. And you also have to be wary that, this is the new world and there will always be people that target you for very unfair reasons. And you cannot be friends with everybody and you have to make tough decisions. But as long as you are comfortable with yourself and most of the people know who you are professionally and personally, you should be okay.
Great. Yeah. Thanks. Thank you very much, Stephan, for all the advice and wisdom that you shared today. We wish you good luck with your funds. Hopefully in the next 10 years.
Likewise.
You'll have like 10 plus new funds. Keep the trajectory,
Let's see. It's not going to be easy. We'll do our best.
Yeah, but amazing returns for you and for your LPs, and we'll see you at our summit on November 13 in Lisbon. So we would like, I would like to get your wisdom and also share your knowledge around the Portuguese ecosystem and your experience in other areas. Thank you very much. Thank you, Nico, and we'll release the episode this Sunday.
Thank you, Yuri. Thank you, Nico.